Insurance is a hard enough purchase, and when you see things in the news about insurance policies not getting paid out to people who need it, I understand where there's the reluctance to buy. In this video, I'm going to share with you some inside tips as to why I feel that insurance is rigged. When you're applying for insurance, the insurance companies ask you to complete a personal statement and share all of your medical history that's happened so that they can make a decision as to whether to offer you cover or not. The insurance companies can also ask for medical tests and doctor's reports, and once all this information is received by the insurance company, they'll look at it and make a decision as to whether they'll offer you the cover. There's three typical outcomes that they'll do at this stage. Number one, they'll accept the policy at standard rates, which is great for you. Number two, they'll accept the policy but with a loading or an exclusion. Now the first one, a loading, means that they'll charge you more for the same level of cover as to someone who doesn't have the conditions that you do. An exclusion, on the other hand, is they're going to exclude any pre-existing conditions that you might have, which means that they won't cover you in the event of a claim in those areas. Some of the most common exclusions we see are a mental health exclusion, a back or neck exclusion, and other exclusions to knees, joints, those sorts of things that happen based on your pre-existing conditions. Now, the reason I feel that it's rigged is that even though these things are excluded, the insurance company don't reduce the price. I don't understand how you have a limited policy but still pay full price for this. This is why I believe the insurance companies have the policies stacked in their favor a little bit. The next reason is that insurance companies aren't silly and they put their prices up for most people when they need the cover the most. What I mean by this is that the younger we are and the less likely the events that are covered under the policies are going to happen, the less we pay for our insurance. The older we get and the more likely we are to claim on the policies, the insurance companies put up their pricing based on the claim statistics and how likely it is that those events are going to happen to you. Now, there are ways to get around this with stepped and level premiums for the respective covers, and you can have a look at some of the other videos that I've done to get some further clarification about how those would work. But essentially, as it starts to become more likely that you'll need to claim on your insurance, the insurance company puts up their prices and it does become significant to the point where most people look to cancel their policies right when they need it most. Again, stacking the deck in the insurance company's favor. When you're looking at anything to do with insurance, they'll refer you to a PDS or product disclosure statement. Now, if you've had a look at these documents are likely close to 100 pages thick with definitions and exclusions and terms and everything that you need to know about an insurance policy. Now, I've seen more of these PDS statements than most people, and I still have to spend significant time trying to get my head around what these terminologies are. The reason that I believe that this is again in the insurance company's favor is they don't spend any time to explain these things to you or rely on people like me to explain them to you as well. When I'm helping you with an application or with a claim, it's often that the decision that first comes back from the insurance company isn't the one that's in your best interest. It's my job then to negotiate with the insurance company to make sure the best outcome is secured for you. And what I mean by that is that the policy's offered up front with the best terms, or at claim time that the outcome that you receive is the best possible outcome for you. Without that level of understanding, again, because these documents are created by lawyers for insurance companies, that's why I believe that this too is stacked in the insurance company's favor. Another reason is that insurance companies make it quite difficult for you to apply for these covers. And if it's not difficult, like those ads on TV that offer insurance without any questions, it's easy up front, but it's difficult to claim. What I mean by that is if the insurance company doesn't ask you a lot of questions up front, they're gonna ask you a huge amount of questions when you look to claim on these policies. The issue with this is that you may be paying for something that the insurance company wouldn't be prepared to pay you should they have asked all those questions. Again, stacking the insurance policies in the insurance company's favor, in my opinion. There's a really good book by Michael Lewis called Liar's Poker, and a quote from this book resonated with me a lot when I was looking into this. Any player unaware of the fool in the market probably is the fool in the market. Now, when we're looking at insurances, it's already a hard enough equation without the risk of applying for something that you wouldn't get the claim that you intended. When we're looking at the media, of course they're going to latch onto stories where claims are declined, but as an industry, no matter which channel you apply for insurances, there's over a 90% success rate when it comes to claims. The idea of this video isn't to scare you, but more to provide you with some context when it comes to these decisions so you can be aware of them before going into any contracts. The reason I bring out these videos is to help you make sure that you're in the 90% and help give you more context and understanding when looking at your insurances. In my next few videos, I'm going to share with you some simple tips that you can use to help put some of the power back in your court and help stack the deck in your favor.